2% up for the gold market here. We are moving. You've got a big jump here. Obviously, over the weekend, we did see more concerns around the U.S. and China trade dynamic. And that is a major catalyst when we look at gold here in recent months. When we've had these explosive moves to the upside for gold prices, it is dramatically centered around the tariff story. Once things started to materially get better, well, gold prices came down, and now we see things stalling out to any capacity between the United States and China, causing gold prices to bounce higher. Take a look at the 4-hour level of resistance that we've talked about, this lower high kind of pattern that we've seen. That is until today. We are now back up and testing this level of resistance. Taking a look at this from a 4-hour chart perspective, this was a nice move higher, but it has something to prove here, right? Gold prices rushed right up to in a hurry to this level of resistance looking left. The question now, though, is whether or not it actually has the steam to break out. And I look at this squinty-eyed, right? A little uncertain about that because gold prices have been so choppy in recent time. The market for gold has been choppy. And I've been saying in recent videos and my thought process on gold is I still think that, yes, you can get these big moves in either direction, but I personally think that the path of least resistance for gold at this time, unless you get something seriously further escalating between the US and China, is for prices like these areas to actually reject on either end, right? So if we were to come down, I would suggest that most likely I think that prices are going to reject and just kind of stay sideways. However, if something new comes along that dramatically changes things in a negative way, gold prices could go up. And if things dramatically pause or improve, let's say a deal gets signed between the US and the EU or the US and China, that could settle the market. And markets themselves, right, the stock market loves peace and negotiations and deals and less government involvement, like all those things. The stock market loves. Gold is the opposite. Gold loves, chaos, right? So when we're looking at gold prices, we're saying, hey, is there more chaos right now, or is there more stability? And that, as a gold trader, has to be something, in my opinion, that you at least consider in your analysis of gold. If you're going to employ any level of fundamental analysis, you have to say, what kind of environment are we in? And there are ways more methodically to quantify that. So I'll tell you right now, the way the market is bidding, right? The way the market has been behaving, it's been interesting. So one of my favorite sentiment indicators for like what type of environment are we in is the Bitcoin to gold ratio. And what we can see here is that, guys, we actually had prices deteriorate or the relationship deteriorate back into potentially a bit more of a risk-off environment. The really quick way to read this, guys, is to take a look at this and say, essentially, if we're above this moving average, we're looking at more of a risk-on environment. If we are below this, we're talking about more of a risk-off environment. Obviously, what you can actually see here is that we are in a risk-off predominant downtrend before all the April chaos, right? So we're suggesting that, and then all of a sudden, once things kind of turned and we had all the tariff stuff behind, and then we got the 90-day pause announcement, right? We entered into this very, very strong risk on period.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
But what the Bitcoin to gold ratio is now suggesting is that we may be entering into, at least for now, a bit more of a risk off or cooling the jets dynamic. I think that's very appropriate for stocks. When we take a look at the indices, we've had a phenomenal run. If you caught this run, this was one of the best runs in market history, by the way. In just 50 days or so, we saw the NASDAQ rally like 30+%. That's a phenomenal move in such a short period of time. And so we've had this huge move. Is it normal for us to say, okay, after a 30% up move, is it okay if this market pulls back, moves back down 6, 7, 8%? Is that crazy? I would say no, right? You had that big spike up intraday, but this is a 5% pullback. This is a 7% pullback. This is a 10% pullback. All of that, I would say, is within healthy, normal price action ranges. So do I think that we are likely to come down heavily? No, I still think that indices are path of least resistance. I think we go higher, but I wouldn't be a bear or terrified if we got these types of moves. In fact, I'll tell you, if we got those kinds of moves, I would be personally buying those moves, right? As I've already done with the Russell, I am long the Russell. I bought this sharp pullback that we had 2 weeks ago, right? This is a daily chart, so I actually bought in on the Russell. I'm in profit on this one. It's not a huge winner for me at this time, but if we can get a break through these highs, I do think that the Russell has a lot of movement to the upside to go. So I think indices have plenty of room to run. I'm getting very, very strong overall signals on the Edge Finder. If I just go top setup simplified, look at the top of this top setups page. What this is doing for new viewers, we're looking at sentiment, technical reads, and economic data. And what this is suggesting is that most of our indicators, actually, I think for the Dow and the NASDAQ, I think it's almost all of our indicators are suggesting bullishness for these indices. Now, again, when they suggest something, sometimes people take that and they run with it. And they say, oh, so it has to go up now, right? It's going to go up in the next 1 minute, the next 5 minutes, the next 15, 30, 1 hour, 4 hour, daily, right? It's going to go up just persistently. No, that's not what that means. What the Edge Finder does when it says, oh, it's got a very bullish reading, is it says the general directional bias suggested by all of the metrics is up. Doesn't mean that it has to go up. Nothing is correct all the time. And why is nothing always correct? Like, why does that not exist? New traders are constantly chasing the Holy Grail. I know, I've been there. I've done that too. Why can't I find a system that tells me with accuracy what the market's going to do next? Well, can you tell me what the certainty of the weather is going to be in 3 weeks from now? Can you tell me what who's gonna this is a dire one, but what famous person is gonna pass away in the next 1 year? Nobody knows that stuff. There's a lot of things that can happen, and maybe to make it more market related, can you tell me with certainty what China's going to do next in the trade dynamic? Can you tell me with certainty if the US is going to adopt Bitcoin in a bigger way, or if they're going to reject it in a bigger way? You can't tell me with certainty. You can make probability-based guesses, but those are not certainties. So nothing is certain. That's why nothing is ever a guarantee when it comes to markets, right? That's why any service, any legitimate service tells you past performance is not indicative of future results. They tell you there's risk in markets because there's never a certainty. And if there was, there'd be no potential reward. Risk is the payment you pay for potential reward. That's all it is, right? So no risk, no reward. If you want no risk, no reward, you may be more interested in something that has an incredibly high probability of paying out, such as US Treasury bonds, maybe a little bit less likely in recent times, but for the most part, you're going to get your money back. It may just have been inflated away. But the point is, if you want reward in markets, risk comes with it. Now, again, some people have more risk tolerance, some people have less risk tolerance. But when it comes to me, I have moderate to, I would say, moderate low risk tolerance as a trader. As an investor, I have a little bit, moderate, I would say. But as a trader, I'm not looking to have my account swing 10%, 15% a month or anything like that. I'm looking to shoot for a couple percent per month and just to keep doing that for the next several decades and see where it takes me. Bitcoin, very 50-50 here. Not really a strong, decisive, institutional directional bias when it comes to Bitcoin, which I think is interesting. In some ways, I would say that's kind of positive because, it's not like institutions are just straight up shorting the heck out of Bitcoin, at least according to this CFTC's commitment of traders data. So I take that as, hey, it's not overly loved or overly hated by institutions. Maybe there's a little bit of hedging going on here. I'm not sure. But anyways, taking a look at the COT data for this week, I thought this was kind of interesting. Gold got some big buys last week, which is coincidentally, now gold's going up. Very interesting. So institutions covered a lot of short positions last week. They did cover some long positions, but significantly more short covering that happened last week before gold is now going up. The big one for me this week was the indices. I mean, clear institutional buying happening on the indices. SPX, they added long contracts, they decreased short contracts. Dow Jones, they added long contracts, decreased short contracts, right? This is a week to week buy and sells, kind of dynamic. In fact, also, I'm just going to do this really quick because it's going to bother me if I don't. That is a week to week latest filing. So other big winners in terms of institutional accumulation were the British pound, silver, platinum, gold, SPX, South African rand, the Dow Jones, the NASDAQ, the euro, the US dollar. This is not a huge winner one way or the other, but it is a little bit of a winner. And then we take a look at some of the big losers, right? The Swiss franc got sold pretty heavily. You got the Nikkei sold as well. US oil, they decreased longs, added shorts. The Kiwi dollar decreased longs pretty aggressively, slightly decreased shorts. Canadian dollar, about a mix. The Japanese yen, they decreased longs, added shorts. So very interesting to keep an eye on that. Thank you guys for subscribing to the new channel. If you're interested in stocks, then hopefully I can share some stuff with you there that will be helpful to you. Speaking of stocks, stock market opens up in 1 minute here. We'll see how the indices fare. I do have a long position on the Russell 2000. For CFD brokers, that's often US 2000 as a symbol, or if you're on the futures market, or on the, I trade IWM personally, which is an ETF that just tracks the Russell. So I'm long IWM personally. We'll see how the indices fare this week. Things continue to look very interesting between the US, China, and also the US and the EU. We'll see. Well, who would have thought the dollar to drop again? Yeah, we're back towards those lows, man. That's dollar cannot catch a break, right? We're just back towards those lows. And I do think that the breakout traders are probably rubbing their hands together if you can get a failure at this level. Because, right, you had a nice run for the dollar, nice push higher, and then just failure, right? Coming right back down to those lows in the context of what has been 2025 has been a disaster for the dollar, right? 2025, let's face it, total disaster for the dollar. We are talking about from these highs, dollar index has lost 10% of its value as a basket. That's a big move for a currency. Ooh, a little bit of softness in the ISM manufacturing PMI data. Ivan, we've got 48.5 compared to the 49.3 expected. That is both less than forecast and less than previous. What are your thoughts on this?
My brain, I was listening to what you said, and then my brain saw 49.5, but it's the same as last time almost. So, but also more than anything else is below 50, so it's okay.
Yeah.
I hope it can boost my dollar pairs, to be honest with you. Yay! Because I was worried that the current pause in the like I'm very micro right now, because I'm like, today or tomorrow, if we peak, that's the end of it.
Yeah,
that's the end of my move, as I expected. So it's like
very nice. Yeah. That euro trade looking great, Ivan. With the dollar crosses, did you say you had more than one trade on dollar, or is it just euro?
Oh, I have many. Oh, I bought the entire thing.
Look at you.
I have Aussie.
Very nice.
I have pound and I have euro.
I did see your pound conversation in the Discord, which is awesome. Yeah, that's great. Very nice. So you've got some dollar shorts on today, looking good. And again, coming down, we are at the big question mark here for traders watching FX. We're sitting at a long-term support level for the dollar index. Will it break? Are we going to go confidently back below 100? And Ivan obviously would like to see that. I think it would be great for metals. I mean, look at metals here. 2.5. Silver's up almost 4%, guys. That's a crazy move today. Silver back to multi-year highs or pretty close to it on 34.7. Gold looking like it's rushing back towards those all-time highs. Very interesting. Any thoughts on metals, Ivan?
It's beautiful.
You love the dollar downside.
I love the dollar downside. Metals, to be honest with you, I'm a bit worried about 3,500. 3,500 is it? Yeah. Because it was such a response by the market from 35 down to 3,200. So I feel like this is just like short-term moves, kind of like, okay, we'll figure it out later. Some kind of range. So for gold for me is a bit of, okay, I want it to go higher. I want dollar bullish, but deep down in my fundamental heart, I know this is just another peak potentially before it starts falling again. Because the question is there any drivers for gold now? We had the tariffs, we had wars, we had bearishness on the inflation, but if that comes in higher again, I don't know.
Yeah,
it might be the peak. I'm not going to say that, but it might. I don't like what I see, other than it is range bound, not moving too much. I really wanted to go higher, but everything tells me it's over.
I'm with you on that, Ivan. I mean, I've shared my sentiment on gold being actually kind of neutral. Yes, price action looks very good, and congrats to anybody who is bullish right now trading the upside move, or really what you're really benefiting from here is that dollar weakness that, Ivan, you've traded the currency crosses. I love your basket approach on the dollar. Long other currencies, short the dollar. Same thing with the gold move here, right? So if you're looking at the gold move, I'm with you on that. Like, I don't like to call the top on gold. I never do. I'm not going to short it. I'm not saying, it's going to go up there and then it's going to be a massive crash. Right. You too. Right. I understand. Yeah. But the concept of, here's the difference, right? We're not saying, Ivan or myself, we're not saying, short the highs, it's going to go down. That's not what we're saying. What we might be more suggesting is that the upside for gold could be limited as opposed to maybe something else that we're seeing. So, Ivan, you've picked euro dollar longs, pound dollar longs, Aussie dollar longs. Clearly, you think that there's more upside there than more upside on gold. So I think that's the difference, right? You're not saying, oh, I'm shorting gold at the highs because it's got to come down. You're just saying, I think there's better trades.
Yeah, or more trades that I'm more confident in and have more data on. And for me on gold, just go back to gold. For me on gold, it's kind of like I want to buy the bottom. I want it to rise higher. So I'm not at all even questioning my mind to short it. But it's more of what is my expectation. I talked about that today. What is my expectation? My expectation isn't that this is going to break the bank yet again. Also, we may, if we have another trade war situation, which I'm not going to point out, that's not going to happen. So if that happens with China, with Saudi, I don't know, that might be a fun one. If it happens with Canada or Mexico, it will again have new legs. But until then, I can't trade it. I can't hope for it because I know it has happened, and as fast as it comes in, it even faster is removed. So there's that.
So we had cooler US data come out earlier this afternoon or this morning, depending on where you're located. We've also got I think it's Powell speaking later today. Let me just double check that. I think fairly sure we do. Yes, Fed Chair Powell speaks 6 p.m. UK time, so just under 2 hours away. So we'll see what's said. I would expect it to be pretty much the same as what we've been hearing quite a lot recently, sort of cautious approach, unsure about tariffs. So likely going to sort of reinforce that rate hold narrative, although we've seen inflation come out a little bit cooler, so that might sway it towards a cut, but yeah, I'd be very surprised. So I think euro pound is a really, really nice potential setup. We were looking at this last week. It's still on the edge finder here of a -10 reading. I talk about the price action or the behavior of euro pound quite a lot. I'm getting a bit bored of covering it because I talk about euro pound all the time. But for anyone that hasn't heard me mention it, the typical behavior we see here on euro pound is we generally have very aggressive upside moves, and we've had a particularly large one recently. Obviously, the euro is heavily bolstered. We had a couple of catalysts for that. We had the German fiscal stimulus. We also had obviously the risk flows coming out of the dollar into the next liquid asset, which is the euro in this case. However, we are starting to see this move down now. So considering the fact we're at this level of structure, we've got this 200 moving average that seems to be acting as a dynamic resistance as well. This position doesn't look too bad. The problem is I'm just cautious again about the price action here can be very, very choppy on euro pound. So yeah, I just don't want to get caught in chop. So this week I might just take it slow, but this is probably the number one setup I'm looking at right now. Pound Aussie also makes a lot of sense. I really like Pound Aussie. Let me pull this up. Limitless for brokers. I'm fairly sure there's some links in the description for brokers. I think, is it Oanda? I'm not 100% sure, but I know there's Webull that there was just an advert for. I think, is it Vantage or Oanda or something? There'll be a link in the description for a CFD broker, I'm fairly sure. Yeah, we can have a look at US 30 in a second. Yeah, so Pound Aussie here is getting a really nice reading. I just forgot to mention the macros behind Euro Pound. So I've got written here, the ECB is widely expected to cut rates in June, while the Bank of England is delaying its first cut, waiting on wage and services inflation to cool. UK core inflation remains sticky, while Eurozone disinflation is accelerating faster than ECB projections. Relative policy divergence favors GBP in the short run. Okay, so moving back to the Pound Aussie here, we've got a bullish reading of 8. Actually, let me just focus on this 1 second. I need to log in. Okay, there we go. Yes, so it looks pretty strong. I mean, I suppose the negatives here is seasonality is relatively bearish, but to be honest, seasonality on G10 currencies for me is relatively unreliable, especially in times like this when the markets are not even necessarily fundamentally driven, they're more driven by risk sentiment. So if you look at things like euro dollar is a perfect example. Actually, fundamentally, euro dollar is actually pretty weak, but it just continues to climb because we're seeing a lot of investors come out of the dollar and start buying into the euro. So it makes it tricky, in my view, to find solid swing trades because, again, you could have a great fundamental reason for a trade, but whether the markets are agreeing right now is a different story. However, on paper, Pound Aussie looks great. Retail is sort of 50-50, slightly swayed on the long side, but this isn't enough to change my bias whatsoever. So the trend is still bullish. 200 moving average here is continuing to act as a dynamic support. So I will be looking for price to come back down into this area, have some sort of rejection, then continuation to the upside. So this might be a play for tomorrow once we can see a couple more H4 candles close and see if we can get a bullish one to engulf the previous, and then that would be a signal to get in as far as I'm concerned. We are seeing this resistance level remain intact. We've triple topped off here now. So that could be a little bit of a warning flag, but again, the only thing I can really do at the moment is play off the fundamentals, even if that's not what's necessarily driving the markets right now. Because, you know, you could position risk on or position risk off. And all it would take is one escalation or de-escalation from any, you know, could be Europe, could be the US, could be China, and the markets are going to react quite severely. So you're kind of damned if you do and damned if you don't. So yeah, it puts me between a rock and a hard place. That's just my view, though. So US 30 still, the edge finder is still very risk on actually. So we've got the Nasdaq, the S&P, the Dow, the Russell, all the top leaders here. So that is obviously risk on readings. I don't know. Well, actually, it doesn't look like it really takes into account risk sentiment on the the trades themselves. I suppose you could then say COT data would indicate that. Either way, we are seeing a risk on readings here. So automatically, I'm looking to buy the buy the US 30. We are, again, as I mentioned earlier, we're seeing this 200 moving average act as a really nice dynamic support through here, indicating that the uptrend remains intact. So to be quite honest with you, I actually don't mind where price is right now. It would be very aggressive, and I wouldn't take this because, again, we've got Powell speaking in just under 2 hours. I think that would be a little bit preemptive. But from a technical basis, this seems pretty solid, actually. So a stop loss just below this wick here, just to allow price to have some room to breathe. Also below this 200 moving average, again, just to allow 2 areas of potential support here on this moving average and here at the support level, obviously aiming for price to continue to run higher. But yeah, the stock markets have had an incredible recovery, really. I mean, the DAX has had a full recovery and created new all-time highs very, very quickly, which is very impressive. But it puts me in a bit of a cautious state because the situation isn't done. Tariffs can still, again, escalate, de-escalate. So I'm not really in a position where I want to chase this. If we can see pullbacks, I mean, that would be a bit much. But if we could see pullbacks against this 200 moving average, that would be a great opportunity. Or even just to fill these gaps that we've been seeing get formed that haven't been filled yet, that would also be a really, really nice longing opportunity as far as I'm concerned. So yeah, that's my view on that. TBM bought out 41k. Okay, let's have a look. So you've got a pretty strong entry there, it seems. Let's have a look. 41,000. Hold on, let me just redo that for you. 41,000. Yeah, that's a really nice entry, actually. So I assume you entered. I would assume you entered around this point here. Obviously, it could be wrong, but either way, looks really strong. I would, if I was you anyway, I'd be looking to hold that position and just trail stops, because it's likely. Obviously, I'm not guaranteeing anything. I can't do that, unfortunately, but it is likely that we are going to come back to these all-time highs. Obviously, we're going to have to just watch tariff developments and things, but eventually, if you can hold on to the position, it could be a really, really good money maker. Okay, so pound dollar, similar situation. The pound, we actually just spoke about the pound. Let me just quickly recap it for you. Yeah, here. So the British pound carries a neutral to mildly bearish macro outlook over the next 1 to 4 weeks. While disinflation is proceeding, the Bank of England remains cautious, awaiting clear signs of easing services inflation and wage pressures. Domestic data is stable but uninspiring. The political uncertainty caps investor confidence. Unless the May CPI print shows material improvement in core inflation, the Bank of England is likely to delay easing into August, leaving the GBP susceptible to relative rate divergence, particularly versus currencies whose central banks are already easing. So it doesn't necessarily apply to the dollar, because obviously the Fed's currently holding, but the optimism around the dollar, the optimism around the pound is much stronger than around the dollar. So I would be actually more looking to go long pound dollar rather than short. This actually would have been a really solid entry. I didn't see this. So very similar setup. Look for this 200 moving average. Look for a pullback, whether it be in, well, actually this would make a lot of sense. Back into this level of structure, into this 200 moving average, and then we take a long position looking for a climb higher. Let me just see. Sorry, my cat's here. I'm not sure if you could hear him meow then. Come on, you can come here. Oh, no, you can just walk off. That's fine. Yeah, I'm not really finding much of a fib level here, actually. That makes, yeah, no, there is no fib pullback there. But this alone, to me, is completely fine. I actually really like the look of that. So yeah, actually, I might revise my idea and add this to the watch list here. So yes, I think it would be like this. Stop loss. To be honest, I think this level makes sense, accounting for just this little low here. Obviously, this 200 moving average. That just gives us a little bit of a buffer if price does want to come down slightly lower, so we're not taken out by just noise. Remember our yen? Wait, hold on. How do you remember our yen bet? Yeah, if you're... Are you the person that bet with me that dollar yen was going to go back to all-time highs? Yeah, I'm not sure your idea's working out there, buddy. You might owe me a coffee. Actually, that brings me on quite nicely to my dollar yen idea. So I was actually, yesterday I was quite mixed on dollar yen. However, I've had some time to sit and think about dollar yen this morning and sort of watch the markets. And I've definitely been swayed to going short. The only real roadblock for dollar yen would be if there is a complete resolution of tariffs, to be honest with you. That way, obviously, we'll see an outflow of yen, and we would likely see investors will slide back into the dollar over time. However, the way things are at the moment, dollar yen's not looking good. I've also seen quite a lot of institutional positioning in shorts. So we've got, MUFG is currently short dollar yen as well. So I'm quite happy to jump on this trade. We've also got the 200 moving average that's in a bearish trend here. So I'd be looking for this 50%, 61.8%, this 0.5 to 60, 0.618 pullback. And then I'd be looking to go short into this fib extension. I think that's probably the cleanest, the easiest setup I've got right now, actually. Your new quant, make sure to feed him good. Yeah, I mean, he's been letting me down recently, actually. I told him to give Powell a call and make the dollar a little bit stronger, just so I could get help in hand out some positions. But yeah, he's kind of let me down on that front. You still standing on it? Well, I'll be honest. Ugal. Regardless of what the Fed says, I don't think we're going to see dollar yen go back to 160 anytime soon. Anyway, I mean, obviously we know we need a timestamp because it very well could do in the next 10-15 years. But over the next, I'm going to say over the next 12 to 24 months, I would put money on the idea that dollar yen is not heading back to 160.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.